A very good Thursday to everyone to Frontier Opening Bell. I am boasting for you. Have the pleasure of welcoming all of you to the show this morning. Uchenna Menis, the managing partner at BlueFX Nigeria. Good morning.
Good morning, boss. Thank you for having me.
Thank you. I also, Ayode Jebor, who is the CEO of Afrinvest Securities in Lagos, Nigeria. Good morning.
Good morning.
George Bodo, the director at Call Street Research Analytics in Nairobi. George, good morning. Welcome to the show.
Good to see you. Good morning.
And Onyeka Ijema, who is at Vetiva Capital Management, industrial goods analyst.
Good morning, Boston.
Thank you so much, gentlemen. We appreciate your time. Let's hit the ground running very quickly with a quick snapshot of our markets across the continent on the equity side. The Nigerian market, a whopping 1.04% on the day that the central bank also conducted a multi-billion naira primary market auction. Will squeeze that into the show. Ivory Coast, the BRVM was down 0.24%. The Egyptian market was 0.03% in the green. Kenya made a very strong comeback, 1.18% on the equity side, and South Africa's GSE, 0.44%. So it looks largely positive for a number of these markets this Wednesday. But if you look at the East African market, where George is speaking to us for just about a few seconds, a few minutes, the secondary bond market activity dropped to 2.07 Kenyan shillings. KCB Group, which is a banking giant, reported a net profit decline of 40% to 7.6 billion shillings. And the CMA, the Securities and Exchange Commission by the name, published capital markets soundness report. The monthly report is out, and Rwanda is pursuing its financial ecosystem, what we call the Rwanda Financial Center, is now in talks with the UAE and the Dubai International Financial Center on how to set up a similar one in East Africa. George, let's hit the ground with you. The CMA story and the KCB earnings caught my attention.
Yeah, okay. The CMA, it's a quarterly publication. It basically does broad assessments of what drove the market performance during a quarter. So the latest quarterly soundness report, which covered the period between April and June, was released yesterday, as you say correctly. But some of the things that they say there was, they say so many things, those reports, including discussing global economic development. But some of the key highlights is the fact that they finally authorized listed companies to do virtual AGMs. A couple of companies have done virtual AGMs, and they gave out guidelines on how they can go about it from a regulatory perspective. And then some of the highlights of the stock market performance in the quarter was that the volatility increased. They have a volatility index, by the way, which they do to measure the performance of the market. So on a quarterly basis, volatility increased in quarter two. And then the second item was that the foreign investor participation also increased from about 62% to about 65% in quarter two. But largely, the key thing, the foreign investors were actually net sellers in the market. So we've seen an exit that began in quarter four last year. It's continued into quarter two this year. So those are some of the key highlights of the report.
Why is the KCB, the Kenya Commercial Bank, earning such a very big deal on social media, George?
Yeah, it's because the profit after tax was down in the first half of the year, was down 40% year on year, which was quite significant for, KCB is the largest balance sheet in this region. So such a magnitude, such a quantum of performance would generate interest. But primarily it was driven by, which was expected, by increased loan losses, actually, because you realize that the COVID impact has had, the COVID-19 pandemic has had some negative impacts on banks' performance, especially impairment charges. So this is one. In fact, by the way, one of the third largest bank, actually the fourth largest bank, which is Cooperative Bank, has also just released their quarter two results just now, and also the momentum of the bottom line has also gone down. So the PAT is down actually year on year. So we're likely to see negative growth momentum on bottom line for big banks and most of the listed banks. Because of that, that pressure is likely to be there, especially that said that most of the credit risks crystallize in Q2, and you're likely to see them in these results. We still have a couple of other big names lined up for results release there, which most notably Equity Bank, we should do probably early mid next week. And we also have the likes like Barclays, Standard Chartered, Stanbic, which are yet to release the last. So it's something we'll probably continue watching as the banks release the results. But certainly you'll see a lot of pressure on banks' performance.
Okay, George, give us about 2-3 minutes. I'm interested in this Equity Holdings Group major takeover in Congo DRC of the Congo Commercial Bank. I'm sure that's also in the news, which they bought for $95 million instead of $105 million. So it looks like consolidation is still there within the East African banking space, and it looks like the Kenyans are leading this across to Uganda, to Tanzania, and even as far as Central Africa with the Congo DRC. Just a quick one, let's touch base with the Nigerian market. Yesterday, that's 1.04%. The banks were in the play in terms of volume movers. Again, sentiments changed a little bit. The big story for us in Nigeria tomorrow will be the unemployment report, which will be out 8:30 tomorrow morning. Second quarter is going to be the biggest story within the Nigeria space. In terms of our primary market auction yesterday and all of that, let me ask Ayo Dijiebo to speak very quickly to the primary market auction of yesterday. What's the yield curve chase like?
Okay, thanks, Boston. We saw the continued demand from investors yesterday at the Treasury bills primary market auction. We saw subscription level was very significant, was over 100 billion compared to about 60 billion offer. And as a result of that, we saw yields decline across board, though the 91-day stayed flat at 1.2%, but the 364-day declined to about 3.2%. If you will recall, at the last auction, it increased by 5 bips from 3.35 to 3.4%, which we thought was like the bottom. So with the high liquidity we're seeing in the system, we will continue to see that depression yield, which sends a signal when you look at it, looking at the current inflation rate at 12.56 as at July. So you would see that based on negative return for investors trying to keep their money for the future, you would know that when cashing out in the future, you may not be able to purchase some of the goods and services that have been impacting on inflation rates. So what this does for most people in the economy is that there's a significant search for higher yield. People are willing to take more risks. So some of the activity we are seeing in the equities market, though that has tapered a bit, can be linked to this lower yield environment in the fixed income market. Also, other structured investment that we are seeing and investors willing to invest in that, the PFAs, fund managers, can also be linked to this. And for the pressure, even in the FX, cannot also be isolated from the low yield in the fixed income.
It looks like there's still a lot more activities within the fixed income space in the market today until tomorrow. So just give us a minute. We'll come back to that very quickly. Very quickly before we return to George Ijema, just a second there. Which in a minute, the party was in Delaware last night between Joe Biden and Kamala Harris, and they're raising $24 million already for their campaign for the Democratic Party. How is that filtering into the market, or is it been priced in already?
I don't think that's the case. I don't think we've seen any significant pricing. It's more like a non-event, but I think as it gets closer to the November elections, it becomes clearer who is going to occupy the presidential seat, and then market participants will start to price in their inherent policies. Kamala Harris tilts towards like the less aggressive version of Warren and Bernie Sanders. So there's a bit of money might be going to the people, the middle class, the low income class, and they'll be taking it off from the big corporates. But that in itself, we know that has been their stance. So we'll get to see that if it looks like Biden is going to take up the seat. But however, since this peak, pointer sites have been showing that Trump's approval rating has been increasing. So it's looking more and more interesting as we get closer to November.
Okay, let's talk about the markets a bit more later in terms of the FX play. George Soros says yesterday he doesn't want to participate any longer in the market bubble caused by the Fed. That was the news on Market Watch last night. Again, what does it really mean? What does this billionaire want? If he's getting out or he's still out of the market, maybe we should all get out of the swimming pool. But that's George, let's return to you for a minute very quickly. We understand the pressure on your time this morning. So this consolidation within the banking industry and equity holdings group moving all the way down to Congo DRC, what does it make for this bank, for this very strong appetite it has for acquiring other banks within the region?
Remember that equity was already in DRC, by the way. They bought a small bank that was called Pro Credit back then. And this transaction essentially entrenches their presence in DRC. Essentially, actually, this transaction makes them the second largest bank in DRC after a bank called Robank. And I think there's significant upside to this transaction to the extent that being DRC largely being a balance sheet driven market and balance sheet proposition being very high, it positions equity very strategically for the DRC market and increases the upsides for the bank. And I think essentially we gradually will see that cross-border operations will gradually gravitate towards contributing to equity, contributing towards 40%, almost 40% towards equity bank's balance sheet, which is quite good. Insulates equity from domestic problems sometimes, but also increases them to cross-border risks. And one of the biggest upside here is, countries like DRC, political risk are still elevated. Equity Bank will still have to pump in a lot of capital into these two entities to merge them, because you're buying a bank with different systems, you want to align them, that costs a lot of money. So I think for the downside here is that for equity investors, you should expect dividend payouts to be a bit soft over the next 2 years as these two entities are merged, because it's very expensive or imagine they'll still need to put a lot of money to streamline the operations and bring them on board.
The central bank has also been conducting very massive treasury bills operation. What's the game plan for the Central Bank of Kenya?
Yeah, that's very interesting because the market is very liquid. The banks are not lending, obviously, because of the negative impact of the COVID-19 pandemic on the economy. The economy's ability to take in more credit has been very weak. So banks sitting on piles and piles of liquidity. And we've seen actually the central bank escalate the offers that it's putting on the primary market. So a bond, like this week's bond auction, which happened yesterday, actually the government was seeking to raise about 70 billion shillings, which is about just something close to $700 million, which is very high. We've never seen them seek to raise such a high amount of money. And they're just trying to take advantage of the fact that the market is very liquid. And the pricings are very low, by the way. Last month, the central bank sold a 5-year bond at 10%. For a government that is increasingly adding billions and billions of shillings to its deficit and national debt every day, this is very cheap in my view. So you're likely to see, one is auction performance is likely to be very strong. Central bank is likely to increase the amount of money they're looking to raise in the market. And also the yields are going to be very, very soft. Already they're very soft compared to 12 months ago. The yields are very, very soft. And it's a demand side pressure.
I love the industrial. Thank you, George. I love the industrial goods segment again. Let's, Ijeoma, just a second, quickly look at the South African market, Southern African market. We saw the industrial production, the manufacturing output was coming a little bit strong over the last few days. Some of these stories are coming through, but the retail sales in South Africa was down 7.5% in June because of the COVID-19. Business confidence index, however, went up to 82.8 reading. Monetary policy is not enough remedy for the economy, but you need more fiscal reforms and structural adjustments. That's what the South Africa's Reserve Bank Governor Leseja Nyango says yesterday at a webinar. Meantime, the South African GSE is celebrating 20 years of ETFs listing. Let's come back and get a sense of this from Ijeoma. When you look at the industrial goods space and getting the manufacturing back on track, are we seeing something here that is akin to Nigeria's environment when it comes to getting the industrial manufacturing, the industrial goods sector back on track within this pandemic period as lockdown begin to get eased a lot more? We understand that the South Africans are looking to also ease the lockdown restrictions so that there could be a lift on the ban on alcohol and tobacco consumption and sales as well.
Yes, yeah, thanks for that question. I definitely agree that, you know, we should start seeing some upticks in manufacturing and sales across different segments. You mentioned the lifting of the ban on alcohol, on sales of alcohol, which is going to be a major driver of manufacturing output as well as retail sales. We know that in Africa, South Africa's beer consumption per capita ranks as one of the highest in across sub-Saharan Africa, and so that ban, you know, was definitely hit manufacturing output, you know, significantly, as well as retail sales. Outside of that, though, just similar to Nigeria, we expect output to continue to rise as demand improves following the easing of lockdown protocols. I mean, over time, before the end of the year, we expect that most of the protocols put in place to contain the pandemic to have eased somewhat, and we expect that to improve not just output but also demand. As you know, it's twofold in the sense that one, with economic activity resuming, aggregate income levels are going to rise, which should drive demand. And with the higher demand, we should expect, you know, higher production output across the region. We've seen that in Nigeria, not just in the industrial goods space, but also across the manufacturing space. Your FMCG, even agricultural output has improved as a result of that. And, you know, even just circling back to one of the news items you talked about earlier, which was the cocoa output expecting to rise in Nigeria. This will be largely one of the factors. We are seeing an increase in concentration from the central bank on driving cocoa production in Nigeria. According to the Export Promotion Council, we are like the fourth largest producers of cocoa in the world. I don't know if that still stands, but we are certainly one of the largest producers of cocoa in the world. And given the easing of lockdown protocols across the world, we are seeing a huge surge in cocoa prices. Over the last 2 months, cocoa prices have gone up around 20% in the last 6 weeks or so, which is very significant. And the expected increase in cocoa output, you know, due to that is definitely going to be positive for the economy, especially since cocoa is one of our largest export crops. You know, it will give us that much needed effects that we're looking for.
Thank you. A very interesting story around the agri, FMCG, and industrial manufacturing production. Today is the U.S. jobless data, Uchenna. Meantime, gold is, metals are soft, oil prices are soft, and George Soros says he doesn't want to be part of the market bubble. Should we follow George?
Well, I think these guys have created some significant landmark in the market that when they are saying anything, I think at some point everybody needs to pay attention. Warren Buffett has been sitting on about 160 billion of cash in the last 18 to 24 months. So these guys know exactly what's going on. We are really trading in unprecedented bubble territory. People would say, "Oh, you can link this to the 1990s." .com bubble, but this is far beyond that. What we are saying is really, really unprecedented. The jobless claim, we're still expecting Americans to continue to file in, even as the Democrats and the Republicans have not come up with a particular extension in terms of the unemployment benefits. So that will be seen another, if they don't get any settlement in the near term, we'll be seeing another 20 million Americans fall into the jobless claim without any help whatsoever. So it's not really looking that crazy, should I say, optimistic as people have put out. Last Trump's press briefing, he had nothing to say rather than just showing that the American stock market is the best performing compared to other stock market. That's where we are now, really. So as I said, we're not looking at a V-shaped recovery. We are looking at best a W-shaped recovery, really. And that's what has been pricing into micro conditions across the board, really, the global front.
I'll say I hope we stay with the kind of a W market correction rather than an X correction. Ayodeji, in terms of where the fixed income market will be for today, what's the outlook on the repayment of matured treasury bills, and does the central bank game plan in Nigeria look a bit like, or does it mirror what the central bank in Kenya is also doing? So much liquidity within the local currency unit, yields are very soft. What's the outlook from you?
Okay, interestingly, we know we expect firstly that CBN would also issue OMO without the open market operation today, because we're expecting a maturity of about 30-something billion today, OMO maturity, and that is to minimize, to reduce the liquidity in the system so that it doesn't find its way to FX, because you know the CBN's eyes is really on the FX, reducing pressure within that space. But you know, why our market is a bit different from the Kenya market is our own fixed income market here. It has been segmented. So you have the OMO auction, you have only the foreign investors and the banks that can play within that space, while you are thinking at the Nigeria Treasury bills where everyone can play. Yes, the yields are almost coming at the same level now because the foreign investors that were trying to pull out in the first place have not been able to access dollars. So they've automatically been rolling over their investment. So we feel some of the unfilled orders yesterday would find its way to the secondary market where we have lower rates. So that's expected to pressure yield. Just to touch 1 minute on the unemployment, the news on the expectation of the unemployment data tomorrow. I think this is really positive because the last time we got a comprehensive analysis on our unemployment and underemployment was in Q3 2018. So that's coming almost 2 or 3 years after. Most people have been using just estimates, trying to just gauge or forecast where they feel the unemployment or underemployment level will be, and we'll be able to see where currently our mystery index is once we also have that data. So we're all expecting to see the data, and we can see how was the impact of COVID. Beyond the impact of COVID, even some of the government policies, how that has also translated into more unemployment, or how it has generated employment.
Ayodeji, thank you so much. On a very final note to everyone, the banks in Nigeria are reducing the amount of dollars you can spend on your debit cards everywhere. So I'm not sure if George Bodo, something like that is coming through in terms of FX liquidity within the Kenya space. Let's take 1 minute round on that.
No, I mean we don't expect something like that on this side of the world because the market is structurally different. While in Nigeria, oil it's one of the largest sources of hard currency. On this other side, we have a wide variety of sources of hard currency. And the second issue is that the central bank is not a source of hard currency. The central bank actually also buys hard currency from the market sometimes. So the sources of the hard currency are quite varied, and you usually don't see any restrictions around foreign. And also we have a very open capital account, unlike Nigeria.
Okay, George, I think we may have to get some numbers from you to get some FX inflows from your side. Uche, isn't it?
Yeah, yeah. Yeah, very correct.
Because now we're seeing numbers going down from $1,000 to about $100. $50 was
Yeah.
what it was in 2016 recession period, Uche, isn't it?
Right. Yeah. So you see, it is. I was having a conversation with a top personnel in one of the banks in the country, and he was literally telling me that they are in a very stressed position, and I want to believe keeping spending or capping spending is sort of helping to bolster liquidity within the bank. We don't run a stress test. I'm sure if we do, we'll have a number of our banks having to fail that. So it's just to keep their head afloat, really, basically. They don't want any form of significant, should I say, structured bank run in terms of people trying to access FX and all at the same time causing that pressure in the exchange dynamics that the central bank is trying to bolster. I believe maybe if we have several sources of FX income, as George has mentioned, also with an open structure, I think that would really take a lot of pressure away of the central bank. They can just focus on monetary policy really squarely. Yeah, so I think that's basically my take on that.
Ijema, what's your take on these FX restrictions coming through your debit card?
Yeah, so the restrictions, I believe, are largely on the international spending for on your Naira debit card, not on the DOM accounts and your dollar debit cards. However, I think it's very prudent for the banks to do this at this point. We're in a liquidity crunch, FX liquidity crunch in the country, and as much as possible, they are trying to maximize the amount of hard currency that they have. It's not something that is going to go away until we see liquidity levels improve. And we recall that this is something that we saw similar things in, when we had the last FX liquidity issues within 2016, 2017. And it will only improve when FX liquidity levels improve.
Thank you. Your final word on this, Sayedi Jebo, as we wrap up.
I think we need to take lessons from other African countries. If we don't want to compare ourselves to developed world, we can see how Egypt is surviving despite the COVID period. They are taking all the direct investments in Africa. It's been channeled to that, and for us, continues to deplete on a year-on-year basis, below $1 billion now. Yeah, so I think the lesson is, if we want to industrialize our economy, if we want to grow our economy, generate employment, we need the foreign direct investment more than even the FDI that are currently trapped, and we are leaving a very bitter taste in their minds, and may take a longer time for some of them to come back once they are able to, I'll use the word, escape from Nigeria.
Or escape rather than exit. It's not the same thing, but again, the feelings are different when you are exiting from when you are escaping. When you escape, you might not come back. When you exit, well, you could just stay outside and wait until things improve. Then you make a re-entry. Let's just wrap it up on the North African space, gentlemen. Let me give you everyone a round up to wrap up the show. It's been very interesting speaking with you. For North Africa, Egypt is auctioning 600 million euro-denominated treasury bills on the 17th of August. That's next week, Monday. Meantime, another fintech startup in Egypt, PayMob, has raised $3.5 million to continue its regional expansion. This is happening there. Meantime, Bank Mercer, also in Egypt, is getting $100 million loan from the European Bank for Reconstruction and Development, that's the EBRD. And the Lebanese bank, Blum, is selling its shares in the Egyptian subsidiary. That's it all for today. Thank you so much, George Bodo in Nairobi, Kenya. Thank you from Call Street Research and Analytics. We thank you for your time. Sayedi Jebo in Lagos. Thank you so much from AfroInvest Securities. Ijema Onyeka from Betiva Capital Management, the analyst in charge of industrial goods, and of course, Uchenna Minis FX trader and managing partner at BlueFX Nigeria. Thank you, all of you. Have a great day and see you once again.